All right, welcome back to this week's edition of the Tech Corner. I'm George Tsilis, Senior Markets Contributor here with the Schwab Network. On this week's Tech Corner, we're going to be covering Palantir Incorporated. Just to note, we actually talked about Palantir Incorporated back in February of this year. If you wish to watch that original video, please click the link above. Now, Palantir Technologies is a software company specializing in building and deploying platforms for data integration, decision-making, and operations scaling. Initially, when the company was founded, it focused on the intelligence community in the United States to support counterterrorism investigations. Over time, the company has expanded its services to include commercial enterprises. The company's primary offerings include Palantir's Gotham Technologies, Foundry, and Apollo, as well as its AIP, considered artificial intelligence platform. Gotham is widely used across government functions to uncover patterns within data sets, while Foundry serves as a central operating system for data across industries. Apollo enables continuous delivery and updates of software in various environments. AIP leverages machine learning technologies and large language models to integrate artificial intelligence into enterprise data operations. Palantir is known for targeting large-scale, complex problems that often deter other companies due to high installation costs as well as risks. Now, in the competitive landscape, Palantir faces competition from several companies in the software and data analytics space. Notable competitors include IBM, Microsoft Incorporated, Oracle, as well as SAP. Now, Palantir's unique value proposition lies in its ability to integrate data and operations at scale through its advanced platforms designed to transform large data sets into actionable insights, facilitating real-time decision-making for government and commercial clients. Now, in most recent news, from an earnings standpoint, going back to August 4th of this year, the company reported adjusted second quarter earnings of 16 cents, which beat the estimates by 2 cents. This was higher by 77% considering the same quarter last year, the company only earned about 9 cents per share. Revenue topped $1 billion, up 47.5% year over year, beating by $60.5 million. Notable strength was driven by the U.S. commercial segment, which accelerated gains up 93% from 71% in the first quarter, and government accelerated to 49%, up 45% from Q1. Now, visibility in terms of sales is really important here. If you look at U.S. commercial total contract value for Palantir, it increased 222% for the quarter at $843 million, while closing $2.79 billion in new customer sales, up 141% year over year, as the company continues to capitalize on AI production use cases. Now, in late September last month, Boeing said it was joining forces with Palantir to integrate artificial intelligence into its defense, space, and security business. Its BDS unit would use Palantir's Foundry platform to standardize data analytics and insights across its geographically dispersed defense factories. Now, when looking at Palantir, there are a lot of positives to consider. First off, the company is positioned to join tech giants due to its government ties and rapid artificial intelligence platform growth, offering high margins and strong cash flow potential. As I mentioned earlier, Palantir's U.S. commercial segment is a key growth driver for the business, considering it started off as a defense contracting business. It was up 93% year over year, with that contract bookings up 222%. This again indicates strong market traction and forward revenue visibility. The company demonstrates outstanding growth. For instance, its forward revenue growth estimates at 36% far exceed the sector's 7% average. This highlights the company's strong expansion and increasing financial performance. Now, despite sales growth, Palantir also exhibits excellent profitability, with a net income margin on a trailing basis of 22%, which is significantly higher than the sector median of around 4%. With category leadership in applied artificial intelligence and a strong foothold across U.S. defense intelligence markets with rising commercial wins, this deep integration makes deployment sticky and offers more barriers to entry for the business in the long run. Now, despite many positives with Palantir, we also have to address many concerns. First off, the company relies heavily on government contracts, making it vulnerable to policy changes and budget cuts, which could impact its revenue streams on a forward basis. Despite the strong growth on a trailing basis, Palantir stock is considered overvalued, with potential dramatic corrections if the current trajectory of estimates is not maintained. For example, one metric evaluation to consider is price to sales. Using this valuation parameter, Palantir is currently trading at 125 times trailing sales, which is considered extremely high and may pose a significant risk if growth expectations are not met. From an earnings multiple standpoint, the stock also appears overvalued both on an absolute basis and relative to industry peers. For example, it's trading at a forward multiple of around 284 times earnings, where the sector median is around 25 times. With current multiples pricing in years of hypergrowth and very high margins, even small executional hiccups can trigger sharp multiple compressions, usually starting with price declines. The other thing to consider is competitive pressures from major AI hyperscalers could lead to erosion of pricing power. And lastly, if artificial intelligence enthusiasm cools or headline programs end up slipping, sentiment can turn before the fundamentals do. Now, from a technical analysis standpoint, the annual trend in Palantir has been relatively strong, with a one-year return over 400% and year-to-date returns up over 150%. The near-term bullish trend is also indicated with price rising above both an upward-sloping 10 and 20-day moving average, and the stock has outperformed the market over the last 60 days when compared to the S&P 500. Now, despite this positive upward trend, upside momentum, as measured by the weekly RSI, which is positive, but it's also beginning to weaken and diverge relative to price. The stock is trading above a rising 50-day and 100-day moving average, which have served as support pivot points in the past 52 weeks. Now, keep in mind, if Palantir falls both below these important trend support levels, it could trigger additional selling pressure. Palantir could then find secondary support at its rising 200-day moving average. Now, in summary, Palantir offers premier exposure to mission-critical enterprise, defense, artificial intelligence, with a moat coming from integration in depth and operating leverage. The company remains a leader in leveraging artificial intelligence secular growth trends, which appear to be accelerating industry-wide. With strategic partnerships and sales initiatives focused on expanding its reach and integrating its platform into various industries worldwide, the company is positioned to join tech giants due to its high government ties and rapid AI platform growth, offering high margins and strong free cash flow for years to come. All right, that's it for this week's edition of the Tech Corner. Please join us again next week where I'll be covering Applied Materials, which is one of the leaders in the semiconductor equipment manufacturing space. Please like and subscribe to the Schwab Network. I'm George Tsilis. We'll see you next week.